Fam, it's the $1 Million Ape, your go-to for smart crypto moves, real yield, and warlord-level strategy in the on-chain jungle. Today we talk about something historic. President Trump is about to sign the Genius Act, the first major federal law in the US specifically for stablecoins. Not Bitcoin, not DeFi, not meme coins. This one is all about the digital dollars, the coins that actually grease the wheels of crypto. And fam, this changes everything. Because this isn't just another bill. This is the moment when stablecoins and the platforms that support them go from gray zone to green light, from shadow finance to real-world infrastructure, from Wild West to Wall Street approved. If you're earning yield on stablecoins or thinking about it, this is one of the most important moments in crypto history. So let's break it down ape style. What exactly is the Genius Act? Why are politicians rushing to pass it? What does it mean for platforms like Nexo, offering up to 14 APY on USDC? What risks should you still watch out for? Let's get into it. So here's what's happening. The Genius Act, short for Guiding and Empowering Nations Innovation for US Stablecoins, has just been approved by Congress. The House passed it with 308 yes votes. The Senate followed with a strong 68-vote majority. And all eyes are now on President Trump to officially sign it into law. This makes it the first comprehensive crypto-related federal law in US history. But here's the twist. It's not about Bitcoin. It's not about Ethereum. It's not about meme coins or DeFi. It's about the digital dollars sitting quietly at the center of the crypto ecosystem. Stablecoins. USDC, USDT, and any future stable asset will now be governed by federal rules. That's huge, because stablecoins are the rails. They power trading, swaps, remittances, on-chain savings accounts, and even your Nexo yield. Now let's break down what the law actually does. First, stablecoins must be fully backed. That means every USDC has to be backed by $1 or its equivalent in cash and government bonds. No more funny business, no offshore games. Second, monthly audits are now mandatory. Issuers need to report their reserves publicly, in plain sight. We're talking transparency like a US bank. Third, who can issue stablecoins is now limited. Under the law, only federally approved entities like banks or licensed issuers can create stablecoins. That means more trust, fewer rug pulls. Fourth, it brings in AML and sanctions compliance. Stablecoin issuers must follow the same anti-money laundering laws as traditional banks. So what's the point of all this? It's simple. Washington wants stablecoins to play a legit role in the future of finance, but under their rules. They're taking the crypto dollar, putting it in a suit, and handing it a badge. And guess what? That badge just opened the door for big money. Because here's the move. The Genius Act makes stablecoins legal money instruments. That means institutions, banks, asset managers, fintech giants can now officially hold, issue, and use stablecoins without worrying about legal gray zones. That's why the market's reacting. After the bill passed the House, Ethereum jumped over 6%. XRP, Solana, and other infrastructure coins pumped. Even Coinbase stock rallied. But the biggest win might go to stablecoin platforms themselves. This is where Nexo comes in. Nexo's already offering up to 14% APY on USDC. And unlike the degen farms of the past, this yield is not coming from unsustainable Ponzinomics. It's coming from a real, audited, revenue-based business model. Loans, swaps, interest spreads. And now with the Genius Act, USDC itself is getting regulated. Transparent, legit. That means the yield you earn isn't just passive, it's becoming law-friendly. And that's a whole new ballgame. Because before today, if you parked 10K on a stablecoin platform, you were technically in a gray zone. High yield, high risk, high vibes, but no regulatory cover. Now, you're stacking yield on transparent, reserve-backed assets inside a framework that's recognized by the US government. That's the biggest upgrade to stablecoin safety ever. But let's be clear, it's not all moonlight and monkey dances. Here's what you still need to watch out for. Number one, This law sets a foundation, but it doesn't solve everything. Implementation will take months. Rules for foreign issuers still need clarity, and some players may exit the US market altogether. Number 2, we might see consolidation. Smaller or non-compliant stablecoins may disappear, and that means your coins or your favorite platform might face headwinds. Number 3, be careful of centralization creep. The more stablecoins are issued by banks or big tech, the more they resemble digital fiat. That's the trade-off. More trust equals less decentralization. But fam, don't get it twisted. This is the moment when smart players prepare. While everyone's sleeping on the headline, you're building a stablecoin yield strategy that actually fits the new reality. So here's your move. If you're already holding USDC, check where it's parked. If it's not earning, you're missing out. If it's earning but the platform's shady, move it. Platforms like Nexo now offer 14% on USDC, with no lockups and full access to your funds. That's a massive win under the new law. If you're not holding stablecoins, but want safer yield exposure, this is your entry point. Forget chasing memes. Focus on building capital that compounds and always diversify. Never go all in on one platform or coin, even if it looks shiny. The Genius Act didn't legalize all of crypto, but it did something smarter. It gave us a path to scale stablecoin finance in a way that doesn't scare the institutions. It gave us rails, rules, and recognition. It's not just bullish for yield. It's bullish for crypto becoming a real asset class. So get ready for more banks issuing coins, more platforms offering yield, and more normies joining the game with clarity, compliance, and confidence. If this breakdown helped you understand the new landscape, smash that subscribe button and check the links in the description to start earning real, legal yield with your crypto. Stay curious, stay in control, DAC yield, ape out.